What if the biggest shift in global wealth, the kind that reshapes nations and divides generations, has already started, but almost no one is paying attention? The clock isn't just ticking toward 2030, it's accelerating, and with it, a silent transformation is unfolding, one that could redefine who gets rich, who falls behind, and where the next wave of innovation and collapse will hit first. Do you believe the greatest transfer of wealth in history is already happening? Yes or no? Drop your thoughts below in the comments. Here at Endgame Compass, we've been tracking seismic global transitions, shifts in technology, demographics, policy, environment, and power. But this episode, it's different. We're diving into the world's most critical inflection point between now and 2030, and the unlikely ways it's shaping everything. So stay with us, because by the end of this video, you'll understand why Africa might become the next growth engine of the world, how aging populations are creating hidden economic opportunities, and why women are on track to control the majority of the world's wealth. We're peeling back the myths to find the mechanics of future power, and your chance to be on the right side of it. Let's begin. Life isn't a movie we can rewind. Once the wheel of time moves forward, it leaves behind traces. News headlines, policy shifts, capital flows. Every official report, every change in market sentiment, every moving fund, they aren't random. They're footprints of how the system is evolving. Today, we anchor this insight through a timely lens. The structural macro changes predicted by economist Morrow in his book, 2030, how today's biggest trends will collide and reshape the future of everything. This video isn't about following hype or chasing the next shiny object. It's about identifying the long-term fault lines that will shape where wealth accumulates, and who stands to benefit or lose. Some skeptics might say, isn't everything too uncertain to predict that far? Valid point. But look back over the last few decades. We saw the rise of the internet, then smartphones. We watched globalization surge, then retreat. We witnessed mobile payments explode and crypto assets rattle old institutions. Each of those waves created millionaires and wiped out savings. So this isn't about guessing. It's about pattern recognition, system dynamics, understanding that what comes next isn't linear. It's the convergence of megaforces. It's colliding in unpredictable but traceable ways. And if you don't see the angle early, you won't even realize you've been left behind. Let's talk about one of the most underestimated forces in economics: population structure. By 2030, Africa will add over 450 million people, mostly young, tech-adaptable, and increasingly online. The continent is home to more than 500 million acres of arable land that have yet to be fully utilized. Here's the kicker. Africa leapfrogged straight into mobile banking and digital currencies, skipping older infrastructures like landline telecoms. In some regions, the penetration of mobile cashless payment systems now exceeds that of the US and Europe. That means developers, not donors, are shaping Africa's future. And that means real economic upside. Meanwhile, aging haunts the wealthiest nations. In Europe, Japan, Korea, birth rates remain well below replacement levels despite incentives to raise them. And while America buffers its numbers with immigration, the aging curve is steepening. By 2030, developed nations will have 350 million more people over age 60 than millennials, a profound shift for healthcare, labor, and consumption. We're witnessing a labor supply squeeze. With restrictive immigration policies looming, countries are racing to plug the gap with automation, robotics, and AI. But the numbers speak clearly. Labor-rich regions like Africa and South Asia are where next-level opportunities are forming. Now here's something counterintuitive. Older generations are often framed as a drain on economic resources, but it introduces the concept of the gray generation retirees who aren't just surviving, but thriving with stacked pensions, accumulated assets, and powerful consumption patterns. This cohort lived through post-war economic booms, strong union protections, and generous social benefits. They hold substantial purchasing power, and yet they're often overlooked by mainstream marketing and corporate strategies. What do seniors want? Travel, healthcare, meaningful experiences, cultural engagement, and they're willing to pay. Meanwhile, age-inclusive policies and technologies are booming. Telehealth, wearable diagnostics, AI-powered caregiving devices, all expanding into multi-billion-dollar sectors. The message for executives: stop treating older workers as expendable. Offer respect, flexible schedules, and the right tools, and they'll keep adding value. The message for investors: don't just chase youth trends. Follow the money, and much of it belongs to the gray generation. This might be the most quietly explosive trend of all. Thanks to rising education levels, increased workforce participation, and intergenerational wealth transfer, women are fast becoming the new financial majority. Projections show that by 2030, women will hold 55% of global wealth. An unprecedented shift. And unlike male investors, data reveals women tend to invest longer, diversify more, and react less impulsively to market swings. While that might reduce volatility, it also forces a market rethink. Are financial products, services, and platforms designed with women in mind? However, internal inequality within the gender shift must also be acknowledged. Educated, urban professionals are building wealth, while others, especially those impacted by early marriage or lack of opportunity, may still struggle. For institutional investors and entrepreneurs, this divergence opens doors. Think women-focused finance platforms, maternal wellness, flexible upskilling programs, elder care innovations. They are no longer niche. They are growth verticals. Urbanization used to mean rural migration into megacities. Now it's diversifying. Massive cities, over 10 million residents, have become breeding grounds for platform economies. Think ride-sharing, home rentals, cloud kitchens, co-working. The pandemic transformed how we think about property. Real estate isn't just shelter nowadays. It's asset allocation. As prices spiral in cities, more young people pivot to long-term rentals, spurring the rise of real estate trusts and rent securitization platforms. At the same time, remote work is reshaping geography. More professionals are leaving high-cost Tier 1 cities in favor of secondary hubs or suburbs with better quality of life. As this reverse migration grows, governments and developers alike are investing in digital infrastructure. Think fiber optics, collaboration tools, remote education to support high-value communities outside traditional urban centers. This will redefine local consumption patterns, retail logistics, and even healthcare access in ways we haven't fully priced in yet. Most people think of AI and automation as tomorrow's story. Wrong. It's already reshaping today's industries. From manufacturing and logistics to finance and healthcare, autonomous systems. Intelligent algorithms and real-time data are unlocking efficiencies once thought impossible. AI-powered diagnosis, machine learning stock trades, natural language processing, all becoming commercialized at scale. On the consumer end, concepts like self-driving cars, smart homes, the metaverse are no longer hype. They're becoming product categories. But with innovation come unresolved risks. From algorithm bias to job polarization to surveillance creep. That's why policy infrastructure matters. Tax equity, upskilling programs, digital governance have to catch up before the gap between innovation and inclusion grows too wide. For investors, this means sticking close to core tech trends, but watch out for speculation bubbles. Sustainable winners are those solving real-world problems, not just spinning buzzword-laden visions. If you're still watching, you're not here for clickbait. You're here to understand the forces reshaping our future. Before the headlines catch on, make sure you're subscribed to Endgame Compass and hit the bell icon. Go deeper than the surface. Because financial foresight is how you build real freedom. Now here's a tool we use to decode capital shifts. The three-ring model: news, policy, and capital. News raises investor expectations. Policy sets the rules of the game. Capital, it waits until both of those align, then moves with force. Take AI stocks. Initial press caused an investor frenzy. Then regulators slowed momentum with new oversight. Money flowed in, pulled back, and is now reassessing under revised risk frameworks. Or with EVS, subsidies drove the boom, but as they faded, competition soared, and so have bankruptcies. Watch for structural support, not just hype. Money follows stability. Global power is fragmenting. US-China rivalry, Russia's war in Ukraine, European instability, rising Middle East tensions, all feeding into economic uncertainty. Supply chains are being restructured fast. Nearshoring is becoming the new offshoring. Technology transfer is being politicized. Meanwhile, climate targets like net zero are pushing entire industries to rewire operations. Renewable energy, carbon markets, and sustainability bonds are no longer ESG fluff. They're government mandates. This intersection between geopolitics, green transitions, and supply chain realignment is creating risks and openings. Where others see crisis, we see recalibration. Target emerging markets with population momentum. Africa, South Asia, Southeast Asia. Lean into the longevity economy. Telehealth, chronic care, elderly wellness, and smart aging tech. Prioritize women-centric industries, from fintech to education to wellness brands. Back automation in legacy sectors. Think agriculture, logistics, energy. Go green. Actively. Clean power, carbon capture, sustainability-linked debt. Diversify intelligently across geographies and asset classes. But one more rule. This is a decade-defining period. Don't get distracted by daily noise. Investment isn't gambling. It's decision-making based on momentum that compounds over time. We say this a lot at Endgame Compass. Investing is like planting a tree, not microwaving a snack. You find the right soil, population tides, policy tailwinds, innovation trends, and then you wait. The people who lose money at scale are chasing the quarterly scoreboard. Your edge is patience and clarity. 2030 is only 5 years away. And yet, in AI, the energy transition, fintech innovation, and migration, the shifts have already begun. The question is no longer whether change is coming. It's whether your capital, mindset, and systems are prepared. If this gave you clarity, do more than click like, subscribe, and hit the notification bell. We're mapping the forces most analysts miss, because the map to the future doesn't come from wishful thinking. It comes from following the compass. This is Endgame Compass, and we're just getting started. I want to hear what you think. Is the great wealth shift of 2030 an unstoppable trend, or are we misreading the signals? Yes or no? Drop your view below. And yes, I read every one. If this brought you value, don't just watch. Act on it. Subscribe. Turn notifications on, because in markets like these, timing isn't everything. It's the only thing.